Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for November 13th, 2022. My email address, as you can see, is hgsidoc@gmail.com, and I entitled this, What Happens When the Market Pivots, but the Fed Does Not. Hopefully that doesn't predict what's going to happen this week. As always, these are for educational purposes only. Anything I talk or present should be taken in the spirit of education and not investment advice. I'm a doctor, not a broker. I am independent. I've paid for the tools that I use. Trading involves risk. You are solely responsible for any investment decisions you make. Remember, patterns are cyclical, and growth stocks, if you have them, you now know what it means to fall like rocks. You have to know what stage the market is, the industry group, the stock market. And I think right now you're going to start to see, if this rally continues, more and more questions as to whether or not this is a new bull or just a rally in a bear. I'm going to take the latter. My meeting is December 4th and 5th. We're about a little bit over half booked. Registration includes meals, dinner at Capitol Grill, prior events, some indicators, live recordings from this meeting, and also it's $1,000, no online at this time, and if you bring guests, I can probably accommodate them. There might be some additional charges for the meals. Whatever I pay, they'll pay. Let's go on to the charts and the data. So I always like to go quickly in spreadsheets. So let's just take a look. We'll start with some workshops that I make in HGSI. So we start with the major indexes. I look at how far they off the 52-week. And the first thing you'll notice, if you look at the 5-day performance, the big stocks up 4%, S&P up 6%, and the Qs and the NASDAQ composite up over 8%. To say it was a strong week would be an understatement. It was an interesting week. The NYC, the Dow's now down less than 9%. The NYC is down minus 12. The spiders are out of bear territory, minus 17. And the Russell, the Qs, and the NASDAQ are still down between 20 and 30%. To see how far they're off their lows, you just have to look here. So this has been an amazing 29 days in the market, where the least performer was the NASDAQ, up 12.2. Think about this is a little bit over a month. Actually, since this is 11/13, check that. It's a month in the market with the least performance of that month was 12%. What does that annualize? Like 144%? Wowzer. So we're in a rip-roaring rally here. But the question is this a new bull or still a bear? More to follow. ARCs have come off their lows. They were up 14% on the week, minus 66 from their highs. Bitcoin is still down 83.6%. Somehow, all of us old guys that didn't trade Bitcoin because we didn't understand it don't look as stupid as we did when Bitcoin was 65,000, do we? If we look at the sectors, we could see the best performing for the 52 weeks is energy, and you could see all of them were up over the last 5 days. And look at the outward move by technology and real estate and communication, three of the very beaten down sectors. You can see what they're off their lows. If we look at the markets in Q, you could see that 30% of the stocks are outside their Bollinger Bands. We are starting to be extended, so check that off as a caution sign. 85% stocks above the midline. You could see on Friday, 73% sectors up, 70% industries up, 60% of stocks. Look at 2 days, which looks at Thursday and Friday. You could see very strong numbers for sectors, industry, and stocks. And Thursday was so powerful. Not only did it lift the week, the month. Let me get this straight. The week, 2 weeks, and the month, it was so strong it brought them into very bullish looking charts. The warehouse review is kind of revealing. This week, first of all the ERG scores are above 0%, so that means they're all positive. Hip hip hooray. Remember, we have very few stocks here and few stocks here, so I ignore them. And so what I see here is junk actually outperformed. That's interesting. We could see that earnings per share rank, there's no correlation between EPS rank and performance. If anything, low EPS did better. Certainly low relative strength stocks outperformed, and stocks that were distributing the prior week outperformed. So this was a junk off the bottom week in the markets. The NASDAQ flipped its bongo to green, weekly bongo, that's big. It had a kahuna and a eureka on Thursday, that's big. And notice we finally dropped down below 2% on the new lows, and we're showing new highs. That is an improvement. NYSE, bongo is green. Kahuna earlier in the week. A Phoenix on Wednesday, which quickly was reversed. And look at this. Absence of new lows. I'm starting to see new highs. This is a very bullish picture compared to where we've been. The problem is we get back to the buckets. We have a lot of stocks above the Bollinger Bands. This is where we were a week ago. Notice how this here looks different than this here. Just shows more extended stocks. This is what it looks like extended to the downside. This is what it looks like extended to the upside. You saw reversals on both these dates. We're getting close. So it would not shock me at all to see some pullback this week, or at the minimum some pause to refresh. On the energy side, across the board, energy was down on the week. I know there's a, I don't know if it's G20 or whatever the number is, meeting coming up, and there should be some discussions between China and the U.S. And then there's thought to be some pressure on Russia and Ukraine to end their stupid war. If that happens, you'll see natural gas make some really big drops both in the U.S. and Europe, and we're probably seeing that already. On the metals front, weakening dollar, stronger metals. You see gold, silver, copper, steel, iron ore. The whole complex is up. And you can notice that you got a higher low here in the Baltic Dry Index. So perhaps we can start looking at Starbulk and Zim and stocks like that again. Interest rates continue to amaze, but they come down now over the last couple of weeks. And that is important, I think, if this market rally is going to continue. Don't forget, we're still a yield inversion, and the recessions occur when the yield inversion gets better. And the credit spreads, despite a great week in the market, they didn't come down. And this is what happened in 2018 going into 2019 when we saw the credit spreads move up back here. And we're at those levels now. Overbought, oversold. The white line says stocks above the 200 is getting up. Stocks above the 40 is getting to a point where you'd expect a pause. And if you look at the 12-week new high, new low, we're getting close to this white line. And the closer we get to the white line, the more likely we see a pause. Are you seeing a theme here? There's a lot of things telling me that this market is stretched and that we're likely to get a pause. Now, notice that the McClellan oscillator on the weekly chart set a new high when you're not at a new high on the S&P. That could turn out to be bullish divergence. We've had bearish divergence. I know John Person calls bullish divergence convergence, but that could be interesting. Economic news, we got inflation numbers, we got manufacturing, we got a PPI on Tuesday. We know that'll move the markets. Retail sales, industrial. Then we got some jobless claims, some Fed manufacturing index, and some leading indicators. So certainly with the CPI there, it's going to be an important week in the market for news. Obviously, lots of earnings. Remember what I said last week about things like Capri? If you make your earnings, you're getting a big reward. And if you don't do as bad as the whisper numbers to the downside, you're getting a big reward. So we've seen some mixtures, some really big moves like Capri. Others, really depends what you show. As I've said before, it's a bad judgment it's a judgment call to hold the stocks over earnings. It's bad judgment. to not know when your earnings date is. Expected moves tell the story of the market. We'll look at the spiders. Traded up on Monday and Tuesday, got up to the border of the expected move. And then on Wednesday, we sold off. Did we sell off because of the elections not looking like a red wave? Or did we sell off because of concern or fear about the CPI? CPI was awesome. It weakened, caused big market moves, and we did well on Friday as well. And that's the same if I look at the spiders and the NASDAQ. The YMs didn't do much on Friday, but they've been so outperforming. The Russell looks the same. VIX closed within its expected move, and the dollar is dropping hard, really far below its expected move. And that's probably leading to that strength in metals and, frankly, the market overall. So we started a week off strong, then the red wave didn't materialize. Wednesday looked bad with a phoenix on both the NYSE and the NASDAQ, to be honest. I looked at Wednesday night and I thought, oh, well, here comes the next move down. And then, shocker, we had a positive CPI and the market went up. As of my writing, there's still no resolution of the election. As of right now, it appears that the Dems will likely maintain their advantage in the Senate, but the Republicans still can get a small majority in the House. Either way, even if the Republicans lose, it's almost 50-50 in the House. Obviously, the Republicans will have a lead. If they win, and if the Democrats win, they'll get the 218. No one's going to have a supermajority. The markets will not be happy if the Dems win the House as well. But I think if the Republicans can hold on in the House, that will be fine for the markets, as will lead to bipartisan. You'll need bipartisan support to pass anything. Now, if we find out on Sunday or Monday the Dems hold both houses, where market's going to sell off like Wednesday, in my opinion. Still plenty of economic news and earnings this week, PPI included, and Fed speakers will probably try and talk the market down. Um, as I said before, markets are up between 12 and 17 since the October lows. The rally is impressive. Considering the strong seasonality, might have a ways to go. That said, we have to consider this a bear market rally. But it doesn't mean you can't be committing more cash to the market and playing it to the upside. If we look at 2000, 2002, 2008, 2009, again, look at these bear market rallies: 19%, 21, 20.68, 20.87, and then here 18.4, 24.22. So right now it's hard to say that this is anything more than a bear market rally. But if we get another week like last week, we're going to start beating these numbers, and then maybe we'll have to reconsider. Just to remind everybody, if you like these videos, I do something daily at stocksanddocs.com. I've been traveling a lot lately, and my day job is becoming much more work than I had anticipated, so I've missed a couple of days, but when there's big changes in the market, I try and get there. All right, let's get rid of this. Let's close that. Sorry about that. If you can hear that, that's my iPhone thinking I'm talking to that. Let's save this. All right, let's go into wealth charts and let's take a look at the market. I like to start at hot stocks because, and I said at ETFs by the way, because it gives me a sense of what's working. Momentum has been strong, and you can see its momentum ETF has actually broke above the 200, and you can see it's had a long way up here over the last couple of weeks. This was interesting. World besides the U.S., dividend stocks. So if you just think about those two there, not typically what a growth stock investor looks for. Oil services have the flame, pharma, XLE, XOP, oil, and then commodities. But now we're dropping below. After here, we dropped down quite a bit. If I look at something like the NASDAQ 100, you might want to do this to see what's working. And it's only 100, so it shouldn't take too long. And you can see Micron really doing great. This is a great way of finding things that are moving. They might not have just started the move, and they may have already moved too far, but you'll find things that are definitely moving up or down depending upon your settings. Indices daily, you could see that whether I look at spiders, Qs, diamonds, or Russell, we've all broken out. Now the 200-day is looming as the next well, target and likely resistance on the spiders. The Qs have a long way to go. The diamonds have already broke out, and this dotted line up here, which is at about 355, is where they rolled over earlier this year back in April. So I always look at the prior area of failure as my target there. On the Russell, we broke above the 200, so that's the other one above its 200. Seems to be stalling there. We can see the VIX dropped as we had expected to do. But look at this dollar heading back towards the 200. I think so. ISO failure broke below the 50, failed to get back above it. Now it heads down to the 200. And the dollar weakening is good for worldwide, which is why we saw that in the hot stocks. It's good for commodities, metals. It's also good for the stock market. Speaking of commodities, look at gold and silver. We've been watching this over the last couple of weeks. Target's got to be the 200 on gold. On silver, you can see it stalling at the 200. Oil had a good day on Friday with a gap up, 2.96 return on the day. Now it's running into the 200. Natural gas continues to be whipsawed by geopolitics. The other huge move on the week is look what happened to rates on Thursday. They came all the way back to the 50. They didn't do much on Friday, but they closed at 3.813. That's off of being as high as over 43. So we've seen a significant improvement in rates. And as this weekly chart here, ratio of value to growth, when rates fall, it starts to favor growth. So that's not a big shocker. My weekly timing signal, 3 out of the 5 have gone positive. The spiders, the IWM, and the diamonds. The Qs are the only one, and they're just missing it here. And maybe it's imminent. Remember, I look for price above the 30-period WMA on a weekly chart and a weekly bongo green. So 3 out of 4, that certainly feels good about the market. If we look at market theme, I'm just looking at short-term chart. Notice we're starting to move up. Large caps are in favor up high. We're also moving up on the hourly here where growth is favored over value. So that's a change. If I look at the S&P 500 sectors hourly, let's just talk about them. Material strong but gave up some on Friday. Look at communications turning around. Maybe there's something going on as Facebook chat and others have firmed. Energy weakened a bit, still overall strong. Financials strong. Industrials have been strong. They gave up some on Friday. And then technology came off the bottom. Staples weakened. Healthcare weakened. Discretionary showing some interest off the bottom. Not much on utilities. And real estate perhaps is trying to move up. I go into the bull scanners here. And let's just look at the heat map, the S&P 500. And when you see the big things on the top and down the left-hand side positive, you'll notice that some of the big cap tech were very positive. Notice what was negative. United Healthcare, Lilly, J&J, Bristol Myers Squibb, and then you got some staples, McDonald's, Pepsi, Defense, Lockheed Martin, here's Cigna, Gilead, Merck. So a lot of healthcare stocks showed some weakness on Friday, comparative weakness. Sector scanner, this is interesting. I like to see the weekly performance, or the daily performance. So even though healthcare weakened, it was up 4.79. Let's look at compare, and let's look at what's driving that. Biotech, and this I really thought was interesting. Look at all the biotech stocks that are up a lot. Now, sometimes you'll see one stock that skews everything, but that's not what you see here. You see a lot of low-cost biotech stocks, stocks that have been really beaten down. For example, Z-Lab. Whoops, didn't want to do that. Sorry about that. Which is a Chinese biotech. And look at this. Hasn't taken out its 200. I'd want to see that, but look at the move that this has had. In fact, look at that weekly move here. On the weekly chart, the stock is up 22%. So there are a lot of things moving in biotech. Now, if I go into the wealth scanner, this is a way to do, one way to do top-down analysis, and it's going to show me what industry groups are at the top. There is your Euro stocks, materials, momentum, financials. Looks interesting. industrials, the diamonds, the value stocks, biotech, aerospace, defense, all these are above 800. Now, the best way to do top down is in the sector scanner is to, and I've already done this, so I don't want to do it all right now, but I take the tops daily performers, look at the, whoops, I want to go all the way back up to the top here. I take the top daily performers, look at the weekly, I'll take the top weekly performers, I'll hit compare, and then I'll start looking at, I'll look at algo score and I'll take the top algo score on the daily, and then I'll look at the weekly and I'll fill in the ones that I'm missing. Then I'll go to compare, and these will be the top stocks in these top groups. And I'll probably go from like here down to say 650. And then I'm going to make sure I've got my weekend review as my default there. I do. So now I'm going to add these stocks to my watch list. All right, now I'm going to go to my CAT scanner, and I want to look for stocks that have been in a longer term uptrend and have recently reversed to the upside. So I'm going to go into my settings, and I'm going to price 5 and 500,000, at least one bullish dot. I want to give it 2 weeks to have turned around on the daily, less than or equal to 10. Then I want to have daily bongo bullish, but this is said it had to turn bullish the last 2 weeks. Weekly bongo's bullish. So these are pullbacks that are starting to go up now. All right. Now, I'm going to go into that weekend review. And I've got them ranked here by, let me make sure, by dots. And let's just see what comes to the top. GGB is a steel stock. Now, it is broken out. Look at, so this is exactly the pattern that I asked for. I want a stock that has a momentum, or one of my impulse indicators. It's got 4 of them. It was in a squeeze, but it's just come out of the squeeze. The daily bongo switched from bearish to bullish 5 days ago. The weekly bongo has been bullish for the number of weeks. That's good. 5 weeks. Breakout above the 50 on the weekly. Breakout above the 200 here. The only thing that's not good about this thing is it's probably got some concerns about overhead supply. But you're going to find that on a lot of stocks that are breaking out here. And by overhead supply, what I'm talking about is the fact people may have bought them a few months ago and they're just thinking, if only I can get my money back, I want to take it. So this thing's actually broken out above this trend line. So GGB looks interesting down here. I'm looking at relative strength and OBV. I don't even care about the high jump. We just took out the 200. That looks interesting. If I like this one, then I might look for X and see what X looks like. I can tell you X's PE is almost non-existent. The stock is so cheap compared to historic that I'm tempted on buying some of X and just putting it away. Not necessarily, again, not a recommendation. It's really a cheap stock. But you could see I like GGB better because X has not yet broken out above its 200, although it did have the weekly and daily bongo, and you can see relative strength. But GGB, just pull this down here, cheap stock, take out resistance, gap, volume, breakout momentum. It's got everything I like. IMAX, that's interesting. Who's going to movie theaters? Remember what I said? It was a junk off the bottom rally? Well, what do you call this? This is a stock that's been down. Now, is it turning around and this is it? Was this a volume climax on the sell-off? Maybe. But I look at all these people looking to get out. I have a hard time buying that. In mode. This is a healthcare technology stock that I like. This one is broken above the moving averages. A breakout with volume and momentum from the squeeze. Look at the relative strength in OBV. And you look down here, recent change in daily bongo. Weekly bongo has been green for a while. So this is why I love this tool, because I just put this parameters in and the stocks that I'm looking for come right to the top. Nutanix. I'd have to figure out more about this, but look at this uptrend. Stock has doubled off of its lows in July, August. How many stocks in the market look like that? Well, we know the answer. Not many. It's really impressive, isn't it? Oh, I just hope I haven't lost that. Oh, you're going to kidding me. This thing's going great and I just ruined it. What happened here? Nope, it's still working. Sorry about that. I thought for a second my recording had stopped because I couldn't find that. All right. So look at Nutanix. It's made a big move. Pullback, reversal up, weekly bond goes up. That's an EMS signal. You got volume, breakout, and momentum from a squeeze. Waiting for your relative strength in OBV to do much. It looks like it's starting to. Awesome. Ralph Lauren, retailer, wow. Broke out above the 200. Breakout momentum volume 2 days in a row. Squeeze release, relative strength in OBV. There are a lot of good stocks in this market. Century Aluminum, kind of a bottom feeder here because it's so beaten up. But is something going on here? Look at this. Weekly, 3 dots, breakout momentum volume, relative strength turning up on the weekly, a new weekly bongo. Turn around on the daily here, 1343 is where I'd expect, or $13 or so is where I'd expect resistance, but that's still 30% plus move. So there is a lot of interesting stocks here. If you want to buy strength, you can look at Chevron, plays 3.3% or so dividend. Now, wouldn't you have rather found it here or here? And that's why I kind of like my dots, because I want to find stocks when they're first breaking out. Now, I mentioned that biotech was looking strong, so let's just go look at biotech. I know it's in here somewhere. Sometimes I forget how to spell. Biotech and pharma. Bridge Bio, don't know much about it. It's not in my specialty. Kind of a sideways looking chart. You never know if this is meaningful. It's probably worth putting a buy stop, maybe in this range here. If it triggers that, pay attention. But right now it's still in chop. ETNB. Don't know this one at all, but what a beautiful chart. Nice steady move up, pull back and a breakout. Fate. Junk off the bottom, lots of overhead supply, but lots of momentum. Riata, this one I don't know this stock, but I kind of love the stair step. Probably look for the next pullback and breakout. You can see it's broken out on the weekly. So it's just a wonderful tool because it allows me to pick either large groups of stocks, industry groups, sectors that I'm looking at, and looking for the ones that are leading. Now, if you don't want to do the work to prepare a list, you can drop in all stocks, but then you're going to probably have some junk coming up there as well. Speaking of junk, Kathy Woods had a great day on Friday. And I can't believe I'm going to say this, but if this rally continues and we continue to see junk off the bottom and think about all the all the stocks that she owns, then are we going to see this thing reverse and go much higher? Might be worthwhile to play a little bit of money in that. That's sort of buying an ETF of broken down tech. And then let's just very quickly look at some of the big stocks in the market and see what we think is going on. We'll start with Apple. So Apple, which had this nice rally up here, failed at the 200, came back down really to set a double bottom, if not triple bottom. And now it's rallying here. If it can break above the 200, that's going to really make this market roar. Um, right now, it's still got a ways to go. Would I be in Apple right now? Um, since I think we're in a bear market rally and this thing's going to roll over eventually, maybe I'll feel better if it gets above the 200. Um, I think it's going to be a really good tale of what the market's doing. I mentioned that consumer discretionary was working. When is Amazon down too much? You remember Amazon had a 20 to 1 split. So it was as high as 37.50 and it traded or 100, 185, 100 ish, and it traded down to 85, so more than 50% down. Trillion market cap disappeared. Is it done going down? I don't know how you can prove that. It's still in a downtrend. It's got to get above the 50, 1750 and 200. Eventually it'll be done going down. Um, the run up to the 200 is a long run. So if you like bottom fishing and buying stocks that have been really beaten up, do I think someday this comes back? Sure, but I don't know how long. Meta. Talk about another beaten up stock that's moving. Now, the big jump here wasn't because they did anything positive, it's because they laid off people or they announced layoffs. Again, Meta, which ran from 380 down to the high 80s. Wow. Is it going to go back to its heyday? I don't think so. Could it bounce further? Remember, this was a junk off the bottom rally. Netflix, probably the best of the ones so far because it's already been an uptrend, pull back and looks like it wants to go again. Now, if you don't remember, let's see if the seasonality is going to work today for me. And I don't, the market's been so poopy, that's a medical term, by the way, um, that I've almost wondered if it is even reasonable to think about stocks with seasonality. Netflix, and let's move it up to where we are right now. Or let's actually move it back. So this is, put it here. Whoops. Let's take this out to the end of January. This is last year. Last year the market didn't do well. But if you look at over time, Netflix is up 7 out of 10 years between now and the end of January. It's had a couple of really bad years. The worst was 22 this year, not last year, but earlier this year. Historically, Netflix seasonality is really strong this time of year. Now, am I willing to put my money at risk? Not on seasonality, but my goodness, this thing is leading. It's above its moving averages. It just has a lot of this overhead supply. Google, again, another stock in a big downtrend. Is it getting better? Yeah, it's better. It's way off its lows, 83 up to 98, 15 points, 20%, kind of like the NASDAQ. Is it ready to break out? I don't know, but you look at the FANG stocks and they're starting to look interesting, but you're buying fallen angels. Now, one thing I remember hearing and seeing over the years is last bull market's leaders, here's Microsoft, are not necessarily going to be this one. Microsoft had an EMS, had a 4 dot buy on Thursday. It probably runs up to 200. When it gets interesting to me, not when I get interesting, my wife would say I'm never interesting. But when I get interested is when this thing will run up here, probably do that and then move higher. That's when I get interested. Right now, there's plenty of space there to make a run, but you have to expect it's going to fail at that 200. A break above the 200 is great. This is what it did back in August. This is what it did back in March. And so it's got to get above that 200 to feel good. So, in summary, if I look at the markets, this is the best one. And how good is this? Well, if we go back, you could see it's come off of 370, it's come down to 286, 270, and now it's back up to 337. It's getting close. My goodness, if it gets up here, I'm going to be really bullish. I just will be watching that. That's the diamonds, the leader. The spiders, it's still got to get above that 200 for me to be a believer. Could you be long now? Absolutely, you could be long now. Short leashes, expect the market to roll over because that's what I do. And with my target first to 200, a break above that would get me excited. The NASDAQ, probably the weakest right now, but it too looks good. As you can see, broke above the 50. But you look back, 200, 200, that's my target. No guarantee it's going to get there. And lastly, the IWM. The Russell has also broken above the 200. But you notice it got a little bit above the 200 in January and broke down. Didn't quite get there in the March rally. Failed at the 200 in the August rally. And we've got a sort of a shooting, a topping tail at the 200 here. So watch the indexes. News is going to really determine. I think if the House goes blue, if the Dems retain the House, I think the market sells off. Just my thoughts, not being political. So, I hope you enjoyed this. This is my review of the markets. And I know some people like to see my buy watch list, which I got to tell you, it's gigantic, which means there are a lot of good looking setups, some of which I've already showed you. I'll just throw this up here for a second. AEHR is one we've talked about a lot. This is a technology play. Isn't this beautiful? Pull back, and breakout. Almost up to fresh new highs. American Eagle Outfitter, one of these beaten down low PE retailers, worry about the 200. Array was another recent leader with a deep pullback that's running again. ASML was a giant leader in the last market. Look at that move here, broke out above the 200. Avidel Pharmaceuticals, don't know what this spike was about. It's another biotech or pharma company breaking out here with 3 dots. Here's that Century Aluminum, Coherent. I don't know if they do LEDs as a technology stock. Again, this is not a breakout to new highs. This is a bottom fish, but the stock is moving, took out the 50. Capri, we talked about it last week with earnings, and it pulled back and broke out with earnings. We already talked about Chevron. DocuSign, another leader in the prior bull market, big sell-off. Am I excited about this? No, but look at the relative strength in the OBV, volume breakout momentum, and a REM signal. I don't want to go through all of these. See what else looked in mid we already looked at. Mercado Libre, I don't know if it's more Amazon or eBay of South America, another stock that's been beaten up a lot. But look at this, broke out above the moving averages. This is a new closing high going all the way back to September. And if it can really get above the 10, the 1100 area, it's got some free sailing. This is one that's interesting to me. There's Netflix, Nutanix we looked at. Just a lot of stocks here. Twist Biotech is another one that looked interesting. Got to get above the 200, but look at this run here. It's dropped down from 200 some down to 40. You have to read about these stocks. When a biotech does that, I worry about negative data. But look at the volume here. Look at all these green dots. Look at the relative strength in OBV. That looks interesting to me. And on that note, I think I'm going to say goodbye. There's X. Have a great week. I think the markets have some juice in them, but if the House and the Senate both go to the Democrats, I'm not sure how the market can hold up with that. Awesome week ahead, folks. See you next week. And really, I would love to fill up my meeting and fill it up sooner than later. So if you're interested, um, love to have you. I don't do this often. I get great reviews when I do it. $1,000 a person. hgsidoc@gmail.com. December 4th and 5th. And the one thing I will guarantee is you'll gain weight. Have an awesome, awesome rest of the weekend.